So weekends update, and it's not going to be as long as usual. That is what I say every time. So I try to keep it as short as possible. But as always, the first part is going to be something for you to learn and implement in your trading so that you can able to take efficient trading decisions. And after that, in the second part, we're going to do analysis of natural gas, gold, silver, crude oil, US cocoa, and dollar index as well. So let's straight away jump on to our trading results. This year so far we had a very important lesson to learn here. The reason I'm showing you these results because I know most of you think that trading is not for you. You do your losses, you have no strategy, you have no risk management, you have no trading psychology, no control on your psychology, and you just come in the market, invest money, lose money, invest again, lose money, eventually give up on trading because you have no rules. Now, I want to show you one example of last whole month. Now, you see this chunk, that was a rough month, right? A loser, winner, two losers, winner, two losers, two winner, and then one losing trade. So altogether, it was not a great month. But if you look at the longer term perspective, we are still up in 93% of gains, 71% of winning rate. And as you can see, with the 10K of amount balance and just with 2% of risk, we are still up. Now, if your risk tolerance is 3%, you can see that 16K so far this year. But let's keep it at 2% as I personally trade with 2% of my account balance. That's totally up to you how you trade. Now, if you look here, bad month, right? But that is fine. But in between, there is some winning trades as well. And that is again with 1-to-1 risk to reward ratio. That is something I'm going to talk about in a second. Now, if you scroll down, what do you see here? Winning streak all the way from here and all the way down to here, right? Actually till here. A good winning streak, only 1 or 2, 3 or 4 winning, 4 losing trade. And that is something we call patience and discipline. Also, good risk management. And if you just give up here, let's say you have a random results, you have more losing trades than winners, and right after that you have not seen the results, the upcoming results. No one knows, but you've seen the power of staying disciplined, not blowing up your account, stay consistent with your strategy. With the risk, what I mean by risk is you have a losing trade, you increase your risk. You have a winning trade, you increase more risk. You have again losing trade. Now you want to make up in these 2 trades. Let's say you have increased after these 2 winning trades. You have that euphoria and you want to make your money double or triple. You increase your risk, and in this losing trade, you have lost everything which you have made right here. Then you have a winning trade, then you increase your risk. You lose everything. Then you have 2 winning trade, and once you come in this phase, you are frustrated. You start increasing a risk and lose everything, and you won't even reach to the stage right here where you have numerous amount of winning trades. And that could have made up all the losses which you have maybe above right here, and you have seen the results right here so far. This is what we call trading professionally with discipline. Nothing comes without discipline. If you are a business owner, don't expect the money rolling in your bank account straight away. It will take a time to pick up a pace, right? Exactly same with trading. Now last month, right here, not a great month, but still it is fine. Who knows what comes here? That is how we need to set our mind. That is how our mindset should be. Now that is just 1-to-1, excluding the commodity trades I take or my members trade. These are the only trades I send in my priority group to my members. Now the other trades I teach my students, the other strategy, if you add that results, the result would be different. Because there are few other trades happening in the market which I don't send, but I personally trade. Like I said, it is not a signal group, it is a group where you will learn from these trade alerts and then look for the same entries. Always stay under your risk capital. So first thing, stay disciplined and never overtrade. I personally take sometime 5 to 6 trades in a week. Sometimes even it's just 2 trades. Talking about Forex only. But in a long run, you can see the potential. Like I said, if your risk tolerance is more than that, 16K in 7 months, that is not bad. That gives you 2,300 pounds or $1 every month. And this amount of money. And to make this amount of money per month, you need to go to your jobs for 12 hours, for 9 to 5. Listen to your boss. You can't plan your holiday. And you just want to stay in that system because you're comfortable and you don't want to change your life. Trading is risky, but it is not impossible. There are traders out there who are making money with trading. Doesn't mean by trading you become millionaire. All these people showing big cars and big cash floating around their sofas or on the floor, that is just a gimmick to sell their signals. But in real life, for trading, if you're making enough money that pays your bills, your rent, you have earned your time. And in time, who knows, $2,000 or $2,500 can go up to $5,000 a month. And it is just trading one market, Forex market. If you have investments in the other markets, I have my own investments in crypto. I take my profits there. When the market have a bull run, I cut it, I invest again. I have an investment in stock market sometime. And when you have money, your mind starts to work and think the other ways of making money as well. So keep your mindset like that. Don't come and start trading just by thinking in 1 month you will double your account. You can. I know my friends who invested $500 using leverage. He take up his account to $18,000 from $500. Trust me, I'm not joking. I've still got screenshots. It is possible, but that is gambling, not trading, and that will not work in the long run. And he lost everything next month. So keep your mindset straight, and if you want to become professional, profitable trader, follow one person. Don't just try to find different strategies on a YouTube, implement in your trading, and then you will just go in circles. I hope that gave you a little lesson of how and what we can expect from trading. Like I promised, hopefully by end of the month, I'm going to upload the podcast about my personal journey in trading, where I'm going to show you my learning material as well. When I was learning, I had 3 big notebooks that I've finished in my learning process. So that is something I'm going to leave it for the upcoming podcast. Now, let me show you some of the zones I was looking at when I was trading last week. I sent to the members, few trades I sent to the members, how those trades played out. Now, not many zones played out, but only few, as we are still waiting for the price to come in those zones to take over trade. And some zones did not even work out. That is why very important to look for the conditions. Right here, send this report to the members. Now, initially, we were looking to enter buy trades. A week before this one, I was looking to enter my buy trades from the area above. Now, we had this zone for the buy trade did not play out. Immediately, I have changed my direction. I have not hold on with the trade, or I have not hold on that the price should be reacting from the zone to the upside, but when the price gave me a signal of a possible reversal or head and shoulder pattern like this or bearish engulfer at the zone, I immediately just changed my direction to the downside, not holding on with the hope. Cut your losses. And right here, send this report to the members now. The price is now broken below in the continuation, and the level below is the bearish area and an area from where I will be looking for the possible sell trades on a smaller time frame, as these zones are marked on daily time frame. So with that, bearish engulfer, head and shoulder pattern, everything is going in the favor, and there the price pushed down nicely. Another example of Euro Japanese yen, I was looking sell from this area and then the price broke above, and right here we use this zone for a trend continuation bullish area, and price did push up from here more than around 200 pips almost. But we always look for the condition. I might enter with the double bottom, possible double bottom entry pattern from here, but identifying the zones in a correct manner, it is something you need to have there on your charts, not marking hundreds of lines on your charts and use every single line as support and resistance. Keep it simple, and trading should be simple, not a rocket science. Then we have this trade alert I've sent to the members. Out of 3, 1 hit take profit, 1 hit stop loss, and 1 is still running. Now, these are the only trades I've sent as a trade alert. We also talk about opportunities in the live session. If you follow me in the live session for Priority Plus members, where we take some trades on 5 minutes scalping setups as well. That is I'm going to show you in a very short while. But out of 3, right here, as you can see, we entered at this pair, USDCHF, that nicely hit take profit. I did not get a chance to manage this trade because this push down was so strong due to news event that I couldn't manage this trade, and that just hit the take profit quickly. I normally keep my fixed target, something like this, but I was busy that day. I forgot to manage my targets. But that was a winning trade right here. Now, right here, we have a losing trade as well. If you have a winners, we have losers as well. Nothing in trading is just wins. Right here, a losing trade will be entry. Stop loss can be below. The EMS and 1 to 1, or 1.2 to 1 will be targets. Must break above first. right here. So that was one scalping setup that played out nicely, and as you can see, nicely hitting targets. So that was taken on 5 minutes time frame. So in a live session, you can also benefit from these type of little scalping session where we can increase our ROI as well. And we also discussed about the other market like stock market, crypto market, and all the others in the live session. So that is it for the first part, and jumping straight away on the second part where we're going to do analysis of natural gas, gold, silver, crude oil, DXY, and US cocoa, starting with natural gas. I'm going to go through in detail analysis of natural gas, and I'm also going to talk about different type of scenarios, sell conditions, buy conditions. All we need to look at the conditions. Once condition meets, simply you enter your trades using a stop loss. Either it's going to go against you or either it's going to go in your direction. That is why we have stop loss there, not going to hold on in a hope. Now starting here with Owanda. Now there are two type of entries we can expect from natural gas, either sell or buy. But let's talk about Owanda. Then we're going to talk about the entry we had here on Capital.com and Nemex, where we also had a Fibonacci entry for sell condition. Now let's start with Capital.com. My zones was already marked there, my termination zone. Now if you remember in my last video, if you have seen that, I've said that we have left shoulder, head is ready, and we are waiting for the right shoulder. Now very important to look for your conditions, and once condition meets, we enter the trades. And head and shoulder pattern won't be valid until and unless the price come in this termination zone up there. If it falls from here, that will become invalid, and we can start to look for double bottom pattern from here. And for that, as the zone was not completely broken with the momentum, I'll keep my box for double bottom here as well. Unless and until this low is not broken, we are not completely looking at the bearish side. I'm also going to come to the bearish side for the aggressive traders as well in a very short while. Now for the head and shoulder pattern to become valid, price must hit my termination zone right up there, which is right here, the number you can see in blue, and the price is now inside the support area, which is 2.085, that goes to 2.230. So mark these zones on your charts as well. Once the price come in my zone without a price to close above this rejection box and rejects from here, after rejection I want to see a push down of the termination zone, which is right here, 2.067, that goes to 2.181. Now it is my termination zone below. So once the price hit my zone, come back after rejection, and inside the zone everywhere, I mean anywhere, if the price hit the zone and then come and give us a pullback, now we have a bullish engulfer here, exactly something like this. If we have that, or if we have a 382 candle, that's it. These are the two conditions, two candlestick patterns I'll be looking at for my entries. If we have that inside the zones, we have a buy entry with a head and shoulder pattern. Now if the pullback, let's say after rejection, is strong and price hit this first bottom, in that case head and shoulder pattern will turn invalid. I'm going to start to look for the double bottom entry condition. So these are conditions for buy trades. Now for short term sell trades, if the price forms bearish engulfer, let's say at 50 EMA, and in that process the head and shoulder pattern will also complete, let's say if your price hit this zone, forms bearish engulfer, I'm going to go for the little scalp for sell trade, exit, and look for the next condition. Remember, for the long term bearish trades, I want to see a good momentum below this low. That is why if I see sell condition, I'm only going to go short for a little while, exit with a 1 to 2 ATR for the targets, and then look for my buying condition for the possible head and shoulder pattern, inverse head and shoulder pattern. So these are conditions now I'll be looking at. Now if you remember in my last video, I've also mentioned as the zone has been breached with my Fibonacci entry, which is like this. Now if you are aggressive trader, like I say, aggressive entries are risky. Now that could be reversal from here, or that could be just a retest and a continuation towards the downside. That is why we have different type of entries. Now if you are a trader that looks for a good condition, like a good pattern to form, which is in this case head and shoulder pattern, you sit down with patience and wait. Then you just need to wait for the pattern to be formed. But if you're someone who are a very aggressive trader, who want to take a trade with aggressive entries, of course looking at your risk as well, then 50% pullback has been triggered, and for you that is an entry, and take profit can be till 1 ATR, 2 ATR. That's totally up to you if you want to exit here or if you want to exit at 1.618 retracement, which is something I'm not looking at. But if you're looking at, that's totally up to you if you want to enter aggressively. I personally choose to enter if we have a head and shoulder pattern, or if the price breaks below this low, only then I start to look for my continuation bearish trade. But in that case, aggressive entry will play out and you will be in the trade as well. So it's totally up to you how you want to enter this trade. Now, a good example of that, we were looking at this area for the possible buying trades, right? As we had no entries in this scenario, exactly same what we are looking right here. Exactly same, we might look for a possible head and shoulder pattern or aggressive entry. Now I'm going to show you one example. Aggressive entry has been played out. If you have been watching my videos, you know we had an entry a couple of weeks before, which was like this. Now here, aggressive traders, the entry has been triggered and the price nicely hit 1.618 retracement. And if you're someone who were waiting for the pattern to form, let's say a possible head and shoulder pattern, the pattern wouldn't have been played out and that has gone in the favor of aggressive traders by hitting 1.618 targets. So that's totally up to you how you want to enter. For me personally, I would like to wait for the pattern to form. Once we have a pattern formed, only then I'll be looking to enter my trade. But if you are someone who's also looking at aggressive entry, I've already mentioned the zones right here, 50% and 1.618 retracement, but that's going to be risky. Personally, my personal preference is possible head and shoulder pattern to form. But that's totally fine if you couldn't get an entry here because you waited, you being patient, you have not rushed in the trade. And if you have missed one entry here, who knows, you got a better entry here. That is what the trading is all about. As long as you have stop loss there, you will never blow up your account. So if you have an entry here, let's say we have a completion of head and shoulder pattern, in that case, I'll keep my stop loss below this head of this pattern and take profit 1-1 initially, or you can manage it to the zone above right here, which I'm going to mention in a second. Now, for the pattern to be valid, I want to see a clear bullish engulfer, exactly something like this, or 382 candle. That these are the only two entry patterns I'll be looking at. If we have that, I'm going to enter my trade using my stops and target, and if the price come down and forms a bullish engulfers or 382 candle in this rejection box, then we will have a valid double bottom. I'll keep my stop loss below, take profit 1-1 initially. So these are the conditions. Very simple. I'll be looking at. Now it's totally up to you what entry pattern you prefer. Again, I prefer a less aggressive way for a possible head and shoulder pattern. Now if the price just breaks above without forming a pattern, 50 EMA dramatically, then of course we will look at the upside, as then we will turn bullish because the price will then come above 50 EMA, and then we only going to look for the long trades till we are in the zone above right here. Now here on Rwanda, as we are still inside the support zone, my rejection zones look something like this. Now before that, the zone above here on capital.com is 2.470, that goes up to 2.576. And the zone below is 2.085, that goes to 2.230 if you want to mark these on your charts. So on Rwanda, termination zone looks something like this, above and below something like this for the possible either for the head and shoulder pattern or for the double bottom exactly like this. And the zone here on Rwanda, it is 1.965, that goes up to 2.050, and the zone above, which is right here, 2.307, goes up to 2.461. Here on Rwanda, exactly the same. The termination zone up is right here, hit of the zone, pull back, termination zone below, condition inside the zone. If the price goes, let's say down here, in that case, I'll still look for the double bottom pattern. Doesn't matter if the price is a little bit below, that is still fine. That could be a fake out as well, out of the price, where we had a liquidity sweep and price might push up from here. Liquidity sweep can turn into a possible head and shoulder pattern by hitting the stop loss of the traders and then pushing the price higher. So keep an eye. This is the only pattern I'll be looking at for my sell trade. Otherwise, aggressive entry, Fibonacci entry, market Fibonacci zones. It's totally up to you if you want to look for the Fibonacci entry. I've already shown you the example. Sometimes it plays out, sometimes it won't. But looking at the fact we are still in the support and a possible pattern, that's why I'll be looking for the possible condition of head and shoulder pattern. Now next up we have gold. Gold is inside the trend continuation bullish area, which is 2386.34, that goes to 2418.36. In this zone, if the price forms bullish engulfers or double bottom, I will go long. Now that doesn't mean the price is going to reverse, but that will be enough to hit your profits, which is $13 at this point the ATR is showing me. Otherwise, if there is no condition, I won't be taking any trade. But bullish engulfers or double bottom will be a condition I'll be looking at. In case of double bottom, I'll keep my stop loss below and take profit. I will go 1-1. So I have these zones ready and look at the condition I've just mentioned. For silver, the price inside of support zone, which is 28.71, that goes up to 29.72. Now the zone is a trend continuation bullish area. That is why I'll be looking at my possible trades. If we have bullish engulfers or double bottom in this area. So I have these zones on the charts and look for the buy condition. Once we have a condition here, we're going to go long from here. Exactly same on crude oil. Now here on crude oil, as we have a good momentum below 50 EMA, but we also are in the zone with 78.83 that goes up to 80.60. Now here, as we are broken below the low, if we have a pullback, bearish engulfer, I'm going to go short term only, and here I will look for the bullish engulfers or double bottom in this area. So I'm allowed to go for short trades if we have a condition using 1 ATR, exit, and look for the trend continuation bullish trade. So all I'm looking at conditions. Whatever I get, I will buy. But it is a buying zone, a bullish trend continuation zone. If you want to wait for the pattern to form, wait for that and enter your trades accordingly if you don't want to go for the short-term bearish trades. But for me, if you have a pullback entry bearish, I'm going to go short. Long term, I'm going to go long if we have a buy conditions. Next up, we have US cocoa. For US cocoa, we have a price now coming down to the rejection zone, which is 6565 that goes to 6773. If the price comes down, hit this zone, forms bullish engulfers or a pin bar. Only 2 candlestick patterns I'll be looking at. In that case, we'll have a price forms 1 bottom, 2nd bottom, triple bottom, and price will likely push up from here. In that case, I'll keep my stop loss below this zone, which is right here. But I'm only going to enter with a valid condition. Not going to take sell trade until we are above this yellow box. Once we are broken below, only then we're going to start to look at the downside. For now, it is my buying area. All I'm looking at a valid condition, which I've just mentioned. Lastly, we have DXY. If you're looking at dollar index, strength of dollar in confluence with your other trades, we're trading gold or other pairs with the dollar, then we are looking at dollar index. Now, dollar index is also inside a minor level, not a major one right here. 103.94 that goes to 104.41, a level that has been used by the price as a level of support and resistance both. That is why I've been looking at this level for the possible pattern. The major zone is right below from where we previously had a nice head and shoulder pattern. So exactly same pattern I'll be looking at if we have that. So all I'm waiting for the price to hit my termination box right here. Once the price hit my box, I have another termination box right here. So all I want to see, hit of the zone, termination zone above, then push down, condition A. Then if we have a condition here, and dollar will rise from here. So I'm not selling dollar until we are broken below this low. So wait and see how the pattern forms. If the price pushes up, let's say from here without forming a pattern, in that case, the price will push up from here and then I won't be looking for the head and shoulder pattern. So still in the buying area, and we can expect the dollar to push up either from here or after forming head and shoulder pattern. So that's it for commodities, guys. Hope you're getting value. If yes, give this video a thumbs up, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next one. Till then, take care.